The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, good morning, everybody. Happy Tuesday morning. Feels like a long time since I've been here, but just kind of, I know the reason for that is because, as I mentioned last week, I was up at the San Francisco Money Show over the weekend. I had an opportunity to speak with a lot of terrific investors and traders. Got some more ideas for some great people I want to bring on the show in the next few weeks. Always fun to get out there, hear what everybody's talking about. I'll tell you the big theme that just struck me this time around, more so than in the past when I've been to some of these events. You know, there's often a theme because you get a lot of the people are out there speaking, and you know, some of them are just ridiculously self-promotional, you just gotta say. But a lot of them are very informative and have a good message and are out there speaking because the time is right for their message. The theme that stuck out for me this time around is alternative investments, and not necessarily something like commodities or managed futures, some of the things that might occur to you as being an alternative. But there was a guy I spoke with who is into numismatics, coins. So we had some interesting, very interesting discussions actually about using coins as an investment. So that was something. Let me just fix what's going on here on Tiger TV. Get rid of some screens we don't need. Okay, there we go. Talked to him. I had a guy that I spoke with, and he was also one of the keynote speakers there, who helps investors identify opportunities in fine art. So that was interesting. And then another guy who's sort of on a more regional level for folks around the country. If you're going to be looking at some of these auction houses and looking at antiques and some of these type of collectibles, a fellow that was very involved in helping people value some of these type of investments. So that really kind of stuck out for me this time around. Haven't heard nearly that much kind of talk at one of these money show events. And, you know, you could look at it one of two ways, I suppose. You could say, well, it's right around the time when people start to lose confidence in some of the more traditional investments, being equities and fixed income, that you sort of get a surge in people wanting to discuss some of these alternatives. If you're a contrarian, that might bode well for what you're seeing as some of these opportunities in more traditional type of asset classes. You know, of course, we've seen so much discussion, not just discussion, it's reality about the correlation, the high degree of correlation among various asset classes recently. And when I say recently, I mean going back a couple years. But, you know, so that's sort of the second way you could look at it as well. Maybe it's time to really take that very seriously and expand your holdings into some of these other areas, the hard assets. That's kind of what I heard a lot about, the hard assets. People also talking about lumber, water investment, hearing some of this discussion. So those are kind of some of the themes I was hearing there. You can kind of take your pick at how you want to view that information, how you want to kind of take that in, process all that information. Is it from the contrarian standpoint of saying, well, if everybody's out there talking about the alternatives, maybe it's time to see what's going to be happening to my stock portfolio now, or just like, hey, it's worth taking a look to see. Should I be looking more at lumber, water, fine art, coins You know, I just recently learned that you can put coins into your IRA. Did not know that. That's just something that I found out actually just before I went to the Money Show. I was reading something about that, and then I got a chance to talk to this fellow about how you might go about doing that. So a lot of opportunities out there that a lot of folks may not be aware of. So I've put up, as I normally do, a chart there of the IWM. We're up a little bit today, about 0.1%. This being the small cap show, I like to look at what we just ticked down. We're now up fractionally. So still up about 6 cents, okay? But just a fractional gain there. So what I wanted to do today, we have a terrific guest coming up at the 11:30 hour. Will be my friend Keir McDonough. We'll be talking about some IPOs. So you definitely want to listen to what he's got to say. He's a terrific investor, terrific stock analyst, brings a lot of great perspective on the fundamentals and the charts. And he'll be talking about some of these new companies, you know, that I also like to track. That's one of the reasons I wanted to bring him onto the show, because he tracks some of these in the same way I do, so I wanted to hear some of his perspective. He's got some names to talk about that I have not mentioned. I put the IPO report up there on the homepage of tfnn.com, some recent IPOs. You want to take a look at that and download that? So be sure to do that. That's absolutely free, and will give you a little bit of an idea of how it is that I tend to look at these stocks and why some of these newly public companies might be some of your best investment opportunities. Now, of course, we're sending our thoughts and prayers out to the Gulf Coast region. You know, you've always got the political angle. You've got a storm headed to New Orleans, so you think that's going to become politicized? Of course it is. And, you know, of course, it's even more so because you had the Republican convention. You have it going on in Tampa. Got shuffled around a bit on the schedule. Very minimal effect, fortunately. And, you know, thoughts, prayers, healing energy going out to the New Orleans, Mississippi coast region. We want to see minimal damage and pray that all those folks get through the storm very, very easily. Now, you know, one angle that's not getting a lot of discussion in all of this is the fact that this will bring some much-needed rain to the Midwest region. So there are some blessings that all this rain can bring. So that's a good thing. Okay, want to switch gears here, get a little bit into one of the topics that I was looking at. I noticed yesterday, I was just talking about IPOs. We've got Keir McDonough coming up in a few minutes to talk about IPOs. I noticed that there was a medical software name that was a big mover yesterday. So that got me thinking. I wanted to take a look at the entire industry. And let me just put up a couple of these charts here that are not small caps, but they are stocks that if you are any kind of growth investor, growth stock trader, even on a swing trading or short-term basis, I'm sure you know Athena Health. This is one that is really kind of just barely a mid-cap. It's been around for a while. It's pretty well known to people who have been investing and trading in the growth arena. Market cap of about $3 billion, little over $3 billion, moves about 500,000 shares a day. And this is a medical software company, billing, medical records management for doctors' offices. It's kind of funny. It is actually, I remember a few years ago, when President Obama took office, and, you know, a lot of the talk in advance of Obamacare and some of the initiatives he had in mind, including making medical records more accessible via electronic means rather than paper means. And one of the funny observations, little side notes, is that Athena Health, the CEO, Jonathan Bush, is a member of President Bush's family. He's a cousin of President Bush. So just kind of a little interesting side note on that one. But this is Athena Health, and it's right now, I've got that up for you on a daily chart. You can see that it's getting nice support along its 50-day moving average right there. Now, this is a fairly recent IPO. Itself went public in September 2007. And when I say new IPOs, I'm really, more generally speaking, I'm looking at stocks that have gone public maybe in the past 10, 12 years or so. I know when Keir comes on the show a little later on today, he's going to be talking about much newer companies. And in fact, if you download the report that I mentioned earlier that's on the homepage of tfnn.com, those are also newer companies that went public within the past maybe year and a half. So these are a lot of the companies that tend to be some of the market's biggest price movers. That's why they're often really worthwhile to be tracking, because they can be some of these names that not only show good fundamentals because they're new, they're experiencing a lot of this revenue growth, they're experiencing quite a bit of the earnings growth that's driven by revenue, not by cost cuts. Also, there's still companies that some of the fund managers are discovering. You know, what happens with a lot of these smaller names, it's not necessarily the case that the investment bankers, after they bring the stock public, because they're so small, not necessarily a whole lot they can do with that anymore. So they can often be kind of orphaned. There might be a little bit of coverage, but you do find a lot of these small cap fund managers who do their due diligence, who get out there and are really looking for some of these names that are not necessarily household names, but some of the ones that they can see have the potential. And don't forget, the fund managers, while they're buying is what pushes these stocks higher, they are often in it for the long term. They're not traders, not by any means. So they're longer term investors. They are going to be looking a lot more at some of these fundamental metrics. They are thinking valuation. They're looking at the PEs. The earnings are very important to them, as is revenue growth. So these are the ways that they're valuing these. In other words, frequently these guys can afford to sit through a correction that we as individual investors and traders do not have to. I like what I'm seeing here on this Athena Health stock right now, okay? Now, this has shown kind of moderate growth in the number of U.S.-based mutual funds and hedge funds that have come into this recently. So you maybe like to see a little bit better in that sense. I've got a few seconds here in this segment. You can kind of see on a weekly chart how a little gradual pullback right here, but we are getting some higher lows, and that's something else that I look for, is where the lows fall. Are we undercutting a prior low as we did back here, or are we looking at higher lows? So I kind of like the consolidation here in Athena Health, and we're going to come back and look at some more stocks from this medical software segment right after this break. 877-927-6648. Give a call. Be right back after these messages.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN. And I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back. Looking at some medical software names today. I'm going to get to a recent IPO that I was looking at here, but I just want to kind of set the stage a little bit with some of these larger names that may be more familiar to some people just over the last few months, years. Some of these have been the leaders, but are no longer. Now, what I've got up there for you is the chart for, let's see here. There's Cerner. Okay, there we go. I'm going to put this on a daily chart for you, and you can just kind of see how this is not looking so good. Yeah, they're on a daily chart. You can tell not looking so good right there. It's kind of. I don't really want to use the phrase broken down because it is finding support at its 200-day moving average. So that's a good thing. But you do see that it's had some fairly volatile daily trade recently, well off that high that it reached back in June. I am pretty encouraged by that 200-day support I see right there. It's maybe a little bit below that line, but close enough. Did break through that line slightly, but it's hovering in the vicinity right now, and that's a good sign. So, just watching this one. This was a big growth leader for quite some time, really, throughout the mid 2000s up until not so long ago. It could come back. Now, what I'm seeing here, it's getting good support at that 200-day line, but it has not. Let me put this back up here on a weekly chart for you, and I'll show you. You see there, it has not undercut this previous low, so that's what I was talking about a minute ago. We've got some of these higher lows that we're seeing on these higher highs and higher lows. So just one to watch. So I just wanted to give you some of the context there. And now I'm going to put up this smaller cap recent IPO that was a big price mover yesterday. And this is called Greenway. The ticker is GWAY. It went public back in February at $10. It is now trading right around $16.59. So pretty good. Pretty good gain there since the IPO, but you do see it's been a rocky road. It hasn't gotten there in any kind of linear fashion. Now, this is a small company, so it's not really surprising to see this kind of volatility here. Market cap $477 million. Only trades 64,000 shares a day. Now, this makes physicians' practice management software and a number of other software products that can be used in the health records industry. And the fact that it only trades 64,000 shares a day, that means that investors and traders, you need to be very aware that there could be the possibility here for a sudden shakeout. So be careful about that. We did see an uptick in the number of U.S.-based hedge funds and mutual funds owning shares. Of course, with the IPO, you're going to see that happening, so that's not a big surprise. Just over what that level had been previously. So this is working on its, let's see here. I want to put this up on a daily chart for you here. And there you see that big move yesterday. It's adding to that gain. Moved 6.7% Monday. Big volume. There you can see the big daily volume that occurred yesterday. Now, what happened? You probably say, okay, what happened here? The company made a deal with Walgreens, and it will supply health records software to Walgreens. This reports its fourth quarter tomorrow. So it's expected to, let's see, earn 9 cents a share on revenue of $34.36 million. And that's interesting because that would be a 17% gain on the top line, but no change on the bottom line. Not unusual to see that kind of results when you have a big revenue gain in a new company, and yet not so much when it comes to the earnings, because this is still a new company. It's obviously very much in growth mode. Very interesting deal that this one just made with Walgreens. That's sort of the hallmark of some of these very new companies, that they kind of hitch their wagon to one of these big names. So interesting name there, recent IPO, got my attention yesterday. Watch out what happens with the earnings tomorrow. You don't want to try to jump in on this ahead of that earnings report. Okay, stick around. We have Keir McDonough coming up after the break. He's going to talk about a lot of IPOs. You don't want to miss him. Be right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, welcome back. So I was just talking before the break about Greenway Medical, GWAY, which is a recent IPO that made a big move up yesterday, and I've been telling you that we are going to have a guest in this segment of the show. I understand he is on the line. My friend Keir McDonough, who is a terrific stock analyst, will give us a lot of perspective on some of these names that recently went public. And, you know, Keir, it's great to have you here today. You know, we hear so much when it comes to the IPO world. I think the mainstream media chatter tends to be around Facebook, and it's almost as if the whole IPO market, at least I think when it comes to maybe the media, the mainstream media, it's been tainted by the Facebook fiasco. But there's a whole lot more to it than that, isn't there, Keir?
Okay, nice to be on your show. Yes, there's a lot of great young new companies out there with some new products and services, some really innovative companies too.
Well, that's great. You know, it is funny because what I tend to look at when I show people some of these new companies, I like to pull up these charts and talk about them. And a lot of times they tend to be, sometimes they're companies you may not hear about so much in the news because they may be in industry segments that are not so glamorous as something like social media. But then on the other hand, there's a lot of these retailers that in fact people may know about, but it just doesn't occur to you, hey, this is a recent IPO that could be poised for growth. So tell us what you're seeing out there.
Sure. Well, the important thing to know is oftentimes companies have their fastest growth phase when they're a young, dynamic company. Now, unless you're allocated some of these IPOs from your broker, you're probably best off waiting for some type of consolidation pattern before attempting to purchase these stocks. So basically, you want a little bit of trading history. I find that to be very valuable to see how the institutions are trading these stocks. But I see some great new issues right now. One in particular that I really like is Michael Kors. The symbol on that is K-O-R-S. They are the luxury apparel and accessory company. A couple of bullet points I like on this company. They've had 25 straight quarters of positive comps, and the last 9 quarters have had 35% plus comps. Okay, that's a lot of handbags and sunglasses.
It is. I like that.
They have 253 stores right now. And I think this is one of the most compelling growth stories in retail today. They have the opportunity to triple their store base over the next several years.
Mm-hmm. You know what's interesting about this is because you hear so much about sort of the dichotomy between, well, is luxury doing well? Are the discount retailers doing well? I mean, I think we know which category this one is in. Where is their growth coming from?
Well, it's not only just here in the U.S., but it's really a global brand story because they're about a third of their business in Europe, a third is in Japan, and they have quite a bit in the U.S. You know, obviously the U.S. is their biggest, but we're really seeing some big growth overseas. You wouldn't even know that Europe was in a recession because their business was that strong there. In fact, Europe last quarter grew 110%, and their store comps there were up 24%. And one of the key metrics that I look at is return on equity. Their return on equity is 50%. And that's what leading stocks often have, is that kind of, they're really managing their business well.
Mm-hmm. You know, it is. It's so interesting because I'm looking at the chart for this one right now. It's rallying to new highs. I mean, this one gapped up a couple weeks ago after earnings, didn't it?
Right. Yeah, they had a terrific quarter. Earnings were up 162% for the quarter. Sales were up 71%. They beat the quarterly estimate by 70%.
That's what you want to see.
Indeed.
Absolutely. Now, it's interesting because let's stick with retail for a minute because I'm seeing a few other retail names, different areas of retail. What else are you seeing out there?
You know, there's a recent company, another new issue, The Fresh Market. Symbol on that is Tom, Frank, Mary. And this is a company, they're a high-end grocer. And kind of think of it like a Whole Foods, but they have much smaller stores. They're about 21,000 square feet, and they really concentrate on high-end meat, produce, fish. And, again, they have about 120 stores now. It looks like they have a very large runway in front of them throughout the country.
Mm-hmm. I've been in some of these stores. They're nice.
Into California, where 3 stores are already in the works.
Oh, really? That's important. That's very interesting because I've been in some of these down in Florida. They're nice stores. I didn't realize they were on their way to California. That's terrific.
Yeah, it is. That's a big market, and you know, we'll see how successful they are there. But they've done well throughout the country. They have some here where I am in Boston, so they're doing a nice job. On the numbers, the last 5 consecutive quarters, they've had double-digit gains in EPS, and revenue has grown double digits for the last straight 6 quarters.
Mm-hmm. Very nice. And I'm looking at the chart for this one, too. Now, it looks like this is just slightly off all-time high, kind of bobbling around up there, but it looks pretty good on the technicals. Looks like this one has been in favor.
It has been in favor. Earnings, I will say, earnings will be out tomorrow morning, so it's important to be cautious at this point about the earnings coming tomorrow. But I think the runway for this company is great as they expand. I think they can double their stores over the next 5 years, and I think at this point it's let's see what the numbers look like. But the chart looks good, the story's great, and they've done a nice job managing their business.
Mm-hmm. And I'm glad you issued that cautionary note about don't try to jump into something ahead of earnings. That's something I say a lot on this show, Keir, definitely.
It's important because going into earnings it's difficult going into earnings without at least some kind of profit cushion, and you're probably doing a little bit more gambling buying right in front of earnings. But I think the trend longer term is outstanding for a company like this. But again, the moves aren't always linear.
I lost my audio there for a second, but I'm going to talk here. So, Keir, you have a couple other names that you're looking at in terms of some of the, you've got some new IPOs, some other from the retail sector, and also some tech. There's a little bit of both out there right now, isn't there?
Yeah, I've got one that I really like right here, and it's a recent new issue also. It's LinkedIn, symbol LNKD. And this company is revolutionizing an entire industry right now, recruiting and hiring. And they've had 4 straight quarters of 80% plus revenue growth. And it's not just a recruiting business that's booming for the company. They also have a premium subscription and advertising model to go with it. So I think this company is, they're not Facebook. This is not a social media company. They're really taking over for what companies like Monster.com used to do. These guys are really changing a very large industry, and it's a global company.
You know, one of the big questions when it comes to Facebook, and you hear so much chatter about this one, Keir, is how Facebook is adapting to mobile. And any talk of that with regard to LinkedIn?
Well, but the interesting part about LinkedIn, 25% of their business right now is mobile. And that's up from 15% the prior quarter. So it's a big growth initiative for them. They do have an iPad app that has been very, very successful since they launched it earlier this summer.
Very interesting. Yeah, and that makes a lot of sense. Just in my own experience, I find it a little easier to use on the phone than I do Facebook, just because you're going in there, you're going to maybe connect with somebody, send a message. It's just a whole lot easier than maybe doing a Facebook status update, just in my opinion.
It really is, and I think they're two separate entities. Facebook is more social. This is really geared towards the workplace and finding the right recruits for the jobs that are out there.
Yeah, very interesting. So I'm looking at the chart for this one, too. I'm seeing it's kind of consolidating. How would you suggest, if somebody is interested in this stock, it's one you hear a lot about, so there might be some curiosity, what would be the best way to handle this in terms of a possible buy point at this time?
I'm looking at an entry point on this around 113, 114. It'll clear its recent consolidation. Technically the stock has calmed down quite a bit after earnings. It had a big gap after earnings, ran from roughly 93 up to 113. The last 3+ weeks, the stock has gone, as I like to say, quiet. So I think if the institutions come back after Labor Day or at some point in the future and decide, okay, this is a company with triple-digit sales, triple-digit earnings, I need to get this in my portfolio. It's a big liquid name. It trades almost 2.5 million shares a day. I would let, mid-teens, 112, 114, somewhere in that ballpark. The all-time high on this is almost 123. You could even wait till it moves into new high ground. But I don't see that many companies that have this kind of growth rate that are revolutionizing a market. And so it really is on my radar.
Okay, very interesting. Good analysis, because this is one of these that, people hear a lot about, and there can be a lot of hype, but I think you gave us some facts here rather than a lot of hype. What else are you seeing from tech that's out there, Keir?
Sure, there's another one I like, Palo Alto Network. Symbol on that is Paul, Apple, Nancy, William. Now, this stock is the opposite of Facebook. The stock went up 27% on its first day of trading. Now, they're a leader in the enterprise security system. Basically, they have the next generation of firewalls. Now, what I like about the fundamentals on the company, the last 6 quarters all have had triple-digit sales. The last 3 quarters of earnings, all triple digits. They had 1,800 customers in July of 2010. They have over 7,700 by just this summer. So they've really done a nice job there, and they're adding more than 1,000 customers per month. 1,000 customers have been added in each of the last 2 quarters alone. And they also cover over 100 countries right now. The gross margins, outstanding, over 70%. I will also make the note, earnings are due September 10th after the market.
Okay, right. Something to keep in mind.
But it's one to keep an eye on. Technically, the stock really has done a great job. I mean, after moving as much as it was an IPO that priced at 42, the stock ran as high as 68, and it's just consolidating here. So it might be the earnings, or just let the chart tell you what to do here, but the fundamentals are certainly here for this company.
You know what's so interesting, among many things, but one thing that stands out to me is, again, we hear so much about these social media companies, the techs that are consumer-facing, including Apple, of course, I would say is a consumer-facing tech. But a lot of these that are more involved with infrastructure, you don't hear about, but there's a lot of great opportunities there.
Well, there's always dynamic companies that are changing the way business or the way we live. And here's another company that's built a better mousetrap. You know, these aren't you don't buy these stocks and put them away for 10 years. But you can have these stocks make some dramatic moves in a very short period of time.
Very interesting. Now, we've got just a few more minutes here. We were talking about retail a moment ago. We talked about some of the luxury, talked about Michael Kors, and I was kind of making that contrast between luxury and the discounters. And I know there's been a lot of the discounters that are doing well. Anything from the IPO category in that regard?
Sure. There's one that recently came public. It's called Five Below, and the symbol on that is FIVE, like the number 5. They're a discount retailer, and they've targeted the preteen and the teen market. And the reason they call it 5, everything is $5 or below. Now, right now they have 215 stores throughout the U.S. I've seen reports there is room for 2,000 plus of these stores here in the U.S. And what they do is they focus on kind of a fun shopping experience. All the stores are profitable. 50 stores are going up this year. They plan on 60 next year, and they want to continue at a 20% growth pace. Now, some other metrics. Net sales have had a compound annual growth rate of 54% from 2008 to 2011, and operating income was up 126% compounded over that same period. And I'll throw the same caveat out there, Kate. Earnings are due shortly.
Okay. Yeah. Don't jump into this one. Don't try to beat the earnings on this one.
Exactly. But it's kind of a follow-on to a lot of the other big discount retailers that have done well. Ross Stores, Dollar Tree. These have been big winners over the last few years. Here's another, extension of that into another market. But what I really like technically about the stock, it doubled. It went from 17, the IPO price, to 34. Yep. And it's really now just building its first base. So it's worth keeping on your radar to see if you can find a higher probability spot that you might be able to enter the name.
And this is one that's clearly in growth mode. I'm seeing very high earnings expectations over the next couple of fiscal years. And, of course, that's not a reason to get into a stock, but it does show you some of the institutional confidence.
It does. You're looking for a 47% growth here in 2013 and another 45% in 2014 are the current estimates.
Well, Keir, perfect timing. That wraps up our segment. Thank you so much. Always great to talk to you. And you can reach Keir at brigoscapital.com is his website. Be sure to go check that out. And thank you so much for joining us today.
Thanks, Kate. Great being with you.
All right, stick around, everybody. We've got one more segment of today's Small Cap Roundup. We'll be right back after these messages. There's time to give a call, 877-927-6648.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, once again, I want to thank our guest, Keir McDonough. I want to remind you, I want to spell out the website here, Brigos Capital. It's BRIGOS, capital.com. You can reach him there. He's also on Twitter at Keir McD, KIERMCD, so follow him on Twitter as well. A lot of great information. Okay, so let's want to talk just a little bit more about what we are seeing out there in terms of big movers. I was talking about the recent IPO Greenway, GWAY, and as you noticed, Keir issued many of the same cautionary notes that I like to do about not jumping in ahead of the earnings. You've got Greenway reporting after the close Wednesday. Let me show you one that's moving today. This isn't really, doesn't really qualify as the new IPO so much. They went public back in '93, so almost 20 years ago. You can't really do the Sgt. Pepper, it was 20 years ago today, but soon you can, I suppose. Cybex, Cyberonics, CYBX, Cyberonics is the ticker on this one, reported earnings this morning. This is a medical products maker. We've been talking about medical software names today. implants to treat neurological disorders, epilepsy, depression. I know it seems kind of futuristic there, maybe a little scary to some, but it's I think what these are injectable drugs, so implantable drugs, sort of a time release, that kind of thing that goes into some of these technologies here that you're talking about. Not so much not necessarily so much of the chip that gets planted in your head, although they do have some of the non-drug treatments for epilepsy. That are some of the implants that Cyberonics makes as well. They call them non-drug therapies. So, interesting company. They reported earnings before the open today, and they call this, let me see here, they call this VNS therapy is one of the things that they call this, that they promote. So some very interesting technologies that they've got going on here. But just no need to be, you talk about this company to a lot of people and they think, well, it's the chips inside your head. Some of it is based on magnets, believe it or not. A lot of technology going into some of these magnets. So you see this big jump that it made this morning. It's now has not come even close to closing that gap, but is reversing lower and is at the bottom of its daily trading range as of now. Still some pretty good price action on this one. And you did have some general market weakness today, so sometimes you'll even see something that gaps higher will kind of trade a little bit lower along with the indices. As I'm speaking right now, we've got the Dow just down slightly. The NASDAQ and the S&P 500 are trading more to the upside. So Cyberonics, interesting one from the medical sector that we are seeing out there today. Let me show you here one more I just wanted to take a look at this morning from medical. Not necessarily, well, it is one of the big movers today, actually. I'm not sure about the volume. I wasn't seeing this on some of my high volume screens. This is MedAssets. This is back from the medical software subsector, revenue management, spending management software for hospitals. This one's out of buy range right now. But don't you like the strength, the technical strength that we're seeing in this one? This one kind of jumped up to the top of some of my screens. This is definitely a small cap, market cap of about $1 billion. Moves 577,000 shares a day, so it is one that we could be tracking. Don't forget, check out the special report. That's the word I was looking for. The special report we put up there on the homepage of TFNN.com. On recent IPOs. We've also got our Low Price Leaders newsletter. You could take a free trial to that right now and get in at the introductory rate before the price goes up. And I will talk to you again back here on Thursday.